The fact that Satoshi never moved a coin is another important fact. The fact that it is proof of work is a third important fact. The fact that during the block size wars, right, the small blockers won is another important fact. The fact that you got an unvarnished string of soft forks as opposed to hard forks. Uh, those are all important facts. And so you put them all together, you've got one thing that's universally acknowledged as a digital commodity, Bitcoin. It's the only thing that's ever been universally acknowledged. It's the only non-controversial, decision. Now you've got a bunch of other things that are interesting. The world has a big thirst for digital currency in the form of a stable USD coin. Like the world wants a Tether or a Circle coin. In fact, the world probably wants $10 trillion of it. And the world's only got about 150 billion right now. So there is a demand for that, but then there's a big debate about who can issue it, a bank, a company, a set of entrepreneurs, right? Who? And that will continue. I think that with regard to regulatory clarity, I think the theory was pretty clear in 2010, actually. The theory was pretty clear in 2015. If you want to create a commodity, it must have energy and it must be without an issuer.
MicroStrategy now owns 0.62% of all the Bitcoin that will ever be mined. The company's executive chairman, Michael Saylor, announced that the company bought another 301 Bitcoin for roughly $6 million at an average price of $19,851 per Bitcoin. In sum, the company is one of the planet's largest holders of the asset, owning 130,000 Bitcoin. Apparently, Saylor likes round numbers, buying 301 Bitcoin to reach the 130,000 milestone. Hello and welcome to Money Talks. In today's video, Michael Saylor updates about the current market structure, regulatory clarity in Bitcoin, institutional adoption of the crypto, as well as the present and future of Bitcoin. Michael Saylor also talks about the key reasons why MicroStrategy keeps on buying Bitcoin.
I do think about it. I think anybody that believes in decentralization has to keep in mind their role. But I think that Satoshi set a really good example. And I think we've seen lots of Bitcoiners during the fork wars. I think there were very strong voices in the Bitcoin community. And clearly, I think that the message here or the idea is everybody has to take their turn and they have to drive the network forward and they have to do what they can to contribute to the asset class. And there'll be a time when they'll step off of stage and someone else is going to have to pick up and carry the torch forward. So, I wouldn't be here if it weren't for the early cypherpunks, and I wouldn't be here if it weren't for all the heroic activity that took place during the block size wars. And I don't think I'd be here if it weren't for leadership at places like Fidelity, where, let's take Abigail Johnson, championed Bitcoin at Fidelity, and my first Bitcoin was purchased from Fidelity. I wouldn't be here if it weren't for people like Eric Weiss, who orange pilled me. But my view of my role is we needed to integrate Bitcoin into the public markets, into institutional investors. So I couldn't do what they did, but what I could do is I could show that Bitcoin makes a good treasury asset for a public company. I could actually educate public investors and institutional investors. I could work through the legal issues, the accounting issues, the compliance issues that any corporation faces if they want to integrate into the system. And so that needed to be done. There'll come a time, I look forward to the point when I'm irrelevant, when there's 100 other companies that are bigger than me. When Apple Computer buys $25 billion of Bitcoin and Google buys 50 billion of Bitcoin and then people don't remember MicroStrategy, and we can't keep up anymore. And I will, I'll be like that surfer that surfs the wave, and then the wave passes you, and you just get back on the board and you paddle behind the wave, and people don't notice you're there anymore. That'll be okay. I mean, I think, I expect Bitcoin to go on for hundreds, if not thousands of years. Each one of us has 2, 3, 5, 10 years we can contribute to it, and then, you could get out of the way and let someone else carry the torch.
Due to plunging price action, the company's investment is down substantially in US dollar terms. MicroStrategy's entry price is roughly $30,639 per Bitcoin, and the Securities and Exchange Commission filing states that the firm has bought 130,000 Bitcoin at an aggregate purchase price of approximately $3.98 billion. If MicroStrategy started stacking sats or buying Bitcoin at today's price, it would have spent $2.48 billion on 130,000 Bitcoin. Saylor is currently at a paper loss of over $1 billion. According to the SEC filing, the company made the purchase with excess cash. Saylor recently stepped down as CEO of the company to focus on buying more Bitcoin, while Washington, D.C. has taken aim at the billionaire in a tax evasion lawsuit. Bitcoin enthusiasts were quick to commend Saylor's buy, referred to as the Chad or Giga Chad. Saylor's conviction and commitment to buying Bitcoin despite the investment being underwater has garnered both a devout following and numerous critics.
And I love German mines and I love German engineering. And I think that Bitcoin, of course, is the first example of monetary engineering. So it wouldn't surprise me that Germans that study so much in the world of engineering, they're so fastidious in the way that they engineer their structures, their cars, their engines, their machines. They'll look at Bitcoin and they'll realize there's engineering beauty there. And so I think that's one of the reasons why there's a lot of passion for Bitcoin in Germany. With regard to companies, I think the key to keep in mind here is that at every single stage, Bitcoin needs something different. And starting in the second quarter of 2020 was the era of institutional adoption. And for an institution to adopt Bitcoin, they have to solve the issue of custody because they have all of these legal restrictions about how they can custody the assets. And they have to solve the corporate governance issues. Like for us to buy it, we have to figure out how to disclose it and then how to manage our shareholder relations. It's a very intricate thing. And then there's an accounting issue. The accounting for Bitcoin was set by FASB when the largest holding of a publicly traded company was maybe $1 million. When we started looking to buy Bitcoin, we did a search and we found that maybe one company had owned a couple of $1 million of Bitcoin once a few years ago, overstock or something. It was a trivial thing. So FASB set the accounting treatment to be the most conservative you could imagine, which is you can never write it up, you can only write it down, and you have to write it down to the lowest bid you can find from anybody, anywhere in the world in the history of the ownership of the asset. So that's the same as if you bought something and you went to a party on Saturday night and you asked everybody in the party whether they would buy it from you, and someone told you they'd give you $1 for it. So you wrote it down to $1 and then you held it at $1 for the next 100 years. Okay, that is prejudicial, kind of hostile accounting. It's toxic for a public company with a gap statement, and so there's no reason for the accountants to take any other treatment because they were just being extremely conservative. Now we're in a situation where there are billions and billions of dollars of Bitcoin on publicly traded balance sheets. And FASB has taken up the project, and there's massive interest in reforming that accounting. So I think that if you're a publicly traded company or a conservatively run company, and the majority of your enterprise value comes from selling cars or selling software or selling anything else, you can't reasonably hold a large amount of Bitcoin on your balance sheet because the volatility of the accounting, it impairs the transparency of your P&L and your balance sheet, and therefore it's toxic.
The billionaire said Bitcoin is property rights for 8 billion people. Non-custodial wallets that easily allow users to use Bitcoin along with stablecoins is the need of the hour, he said. Saylor also commented that explaining the background of Bitcoin to a large number of people could be a rough task. His comments at the Baltic Honey Badger Conference 2022 could go a long way in further expanding crypto adoption in Europe. Michael Saylor said the dollar would expand over the Lightning Network non-custodially. The most important thing happening now in technology is Lightning. All the future technology innovation will be Lightning-based, he added.
So I think that what will happen is the accounting will matter, and the accounting will be one element, and the other elements will be regulatory clarity from the SEC and the CFTC and Treasury. Though that will allow banks and publicly traded companies to start to handle the asset, then public investors will handle the asset. And then I think you'll see European companies look at that and they will be emboldened by that and they'll follow. But you know, this entire process will probably unfold over a decade from 2020 to 2030.
The former MicroStrategy chief executive officer said that in less than 4 years, global demand for USD would grow. However, in the long term, people would need Bitcoin, Saylor explained. It will be Bitcoin as a store of value with dollar as medium of exchange for the near to medium term. Saylor said crypto adoption would be driven by educative content on social media and not particularly through books. What spreads is YouTube and video and TikTok. Short videos are instructive.
First of all, I think that if you go back and you look at the classes Gensler taught at MIT in 2018, they're all on YouTube, and you can just Google Gensler blockchain and money, and you'll see them all. I think he laid out clearly the theory of digital property and digital commodities and digital currency and all the issues. And what he pointed out was there are permissioned blockchains and there are permissionless blockchains. And of course, Satoshi's brilliance was figuring out how to transfer value and or manifest value without a trusted intermediary. And the idea is proof of work. But if you want to create a digital commodity, you have to create something without an issuer. You can't have a small group of people to control the protocol, because a group of people controlling the protocol creates an investment contract, and now you're making an investment of money relying on the efforts of others. So the idea here is you have to have a digital commodity without an issuer, and then you have to let it diffuse for a long enough period of time without any protocol, without any material change to the economics, such that it seasons. Right. And so Bitcoin has this 12, 13-year history. And the fact that the monetary protocol was set, the fact that that it traded without value from January 3rd, 2009 till pizza day, 500 years without value, is an immaculate conception that has never been reproduced.
The Bitcoin maximalist executive chairman of MicroStrategy and alleged tax evader also said in a letter that mining is the most efficient, cleanest industrial use of electricity. He said that Bitcoin's mechanism is 100 times greater in its output cost than its input. In Saylor's telling, it's not so simple. He argued that dedicated energy powering those devices will move to generic computers, redistributing efficiency that would not limit carbon emissions. Saylor has previously pledged to defend Bitcoin against energy critics as a founding member of the Bitcoin Mining Council.
And you generate yield, that's an investment contract. He said that a year ago. So I think he's become more forceful in his articulation in the aftermath of the crypto crash. And I think what he's saying is very straightforward. If you want to create a commodity, it has to be without an issuer, it has to flunk the Howey test. And if you've got an issuer, if you've got a small group of people, if they have control over the protocol, then it's probably a security for common sense reasons. I think that the regulators will move forward on this. There'll be some back and forth. There's going to be political debate. Most of the crypto industry has a vested interest in keeping ambiguity, right? Keeping this ambiguous, right? And so most of them, they'll say, well, we haven't gotten clear guidance. Well, there is clear guidance. You know, if you've got a company and you issue equity in the form of a token, it's a security. There's clear guidance, right? If you created a company and you gave yourself the stock and then you sold stock to investors and then you sold the general public and then you keep changing the code that controls what you can do with the stock, it's a security. So I think what Gensler said is just because you don't like the guidance doesn't mean you don't have it.
So, when do you think regulatory clarity will come into Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon at the next video. Thank you so much for watching.